we expect to see probably some additional dirt coming, whether it's by tolling, like in parallel with getting that crushing circuit going. There's going to need to be some more feed coming.
No, that's it. And either that feed comes organically, Matt, through our own resource, or it comes inorganically through M&A or tolling, whichever way you want to put it. But, there's very much that sort of dual track strategy to just make sure that we've got more than enough dirt, by the time we turn the green button on.
This is general advice and my opinions only. This episode's company has paid me for this interview. I may be long, short, or hold an interest in stocks or CFDs mentioned. Past performance isn't reliable. The interviewee's views are their own, not necessarily mine. LEVRD operates as a corporate authorised representative, 00131 8377 under AFSL 548573. You can find our financial services guide via the LEVRD website, link in the show notes.
As we are in state of origin theme, I'd say we're heading to North Queensland for the copper district. And I'll tell you what, after I've seen this company at a lunch, and it is intriguing. Austral, AR1, right in the heart of North Queensland, possibly going to be an influential player in some capacity, I believe, for this copper theme. I've got the chair, Dave Newling, on. How are you, mate? Welcome to LEVRD.
Yeah, good, Matt. Thank you, and go the Blues.
Good man. Yeah, good man. Hey, don't wait. Not to the Queensland people. You're trying to. The community engagement's probably not the right thing to say. North Queensland, mate. Austral was. There's a bit to piece together. I wanted you to tell me everything up until now in terms of they're in a bad spot. I guess you've bought it back. You've got Mt Kelly for the oxides, you've got the old Rocklands mill for the sulphide, you've just got Lady Loretta out of Glencore, you've got tolling agreements with Glencore. Mate, can you give us just a bit of a history of yourself and what this company's been through to, I guess, this restructure point right now?
Yeah. So to sort of start at the start, we take ourselves back to September 23. The company went into voluntary suspension at that point in time, and really progressively sort of found itself heading towards a receivership, which eventuated in May 24. At that point in time, basically Secova, which is an entity associated with Gerry Harvey, which is the family office that I manage, and Glencore basically got together to put together what's called the APA, but effectively it was a debt for asset arrangement that allowed the company to survive and survive whilst I looked at recutting the strategy and acquired some assets. As you said, we acquired Rocklands and Lady Loretta, and then basically the back end of 25, raised 40 million to get us back on the ASX, and then in February raised another 65, including 15 million coming from QIC, to basically fill up the coffers ready for the next 18 months. And so, today it's really a kind of resurrection story. We've paid everybody back in full. We didn't take any discounts. We didn't go through any DOCA, style arrangements. But as we sit here today, I've got sort of north of $80 million of cash at the bank. We've got a market cap, around the sort of 220 to 25 mark. And I've got, two big key assets that really underpin the future of the company. And what we're looking at doing is obviously consolidating part of the region up there.
So what broke in the previous model, for the previous Austral model? Mt Kelly just didn't make the dosh?
No, it's actually pretty reasonably straightforward. The company was fairly highly leveraged, and then there was a couple of externalities, and the same flood that has seen Capricorn Copper next door to us, underwater and still underwater today. We had the same flood event, and so that loss of production really hurts you. When you've got debt in your capital structure, and the mining game typically has reasonably high cost debt involved. Certainly for the risk that you're taking on, and that that's not really a position a junior resource company wants to find itself in. So, we've battled hard. We took on some debt to acquire Rocklands. We took it on for 6 months. We've just paid it back to Glencore. And that allowed us to secure that asset. And as I say, today we find ourselves in a fairly enviable financial position.
Okay, I want to go through you. I got your three pillars here. So you got Mt Kelly, you got Rocklands, and you got Lady Loretta. And I guess you'd say Lady Loretta sort of ties in with Mt Kelly in a way, up in the same region. Take us through it, because you got an oxide strategy and the sulphide strategy now, and I guess here's the oxides might be. You've got dirt for the oxides, but you're chasing dirt for the sulphide. So give us the spiel on the map here.
No, that's okay. And so we'll probably just come back one step. So really, those three pillars is like stage one of the strategy, and stage one of the strategy was really about how do we get the production capability. You've got to have these big pieces of infrastructure to be able to process. And we were pretty fortunate that Rocklands came onto the market at the time when we were looking at it, but we were able to put our foot on it. And now we have these two big machines, which almost become sort of the albatross for most junior resource companies. It's very hard for an exploration company that has a market cap of $50 to $80 to $100 million to go and raise $300 million, to get into production. They take a lot of time. There's a lot of risk around procurement. And so we sort of, position ourselves to be infrastructure kind of driven. That allows us to be production driven. And really, that production is what generates a margin. And that margin is what we look at utilising to further our exploration. So we sort of changed the strategy and the narrative around a little bit. We came from the other end, if that makes sense, rather than being sort of, ore driven, if you like, or resource driven. We wanted to be sort of production and infrastructure driven. And so, those three key pillars in stage one provided us all the production capability. And then stage two, which is where we're sort of, focused on now for the next sort of 18 months, is really about how do we expand the production. That is, how do we, find more, more dirt, more rocks, more ore to get through the facility. And how do we do that for a long period of time? How do we make sure that the stockpiles that are coming in, are chronologically scheduled, to ensure that both of those facilities are full for, the next 10 to 15 years.
Now,
really, if we can do that, then, there's no reason to suggest we can't do that. The whole region, if I take out all the players and the owners and the like, the whole region, is highly prospective for copper. It has been for a long period of time. So we're not pioneering out in the never. We're playing in a region that's well known, for the metal that we, want to be.
You can just see on the map how busy it is in this region, and which people, unless you're coming from the West Australian side, unless you haven't you've been there, you probably don't. I didn't really appreciate it either. So just start at Mt Kelly. I just want to get my head around how much dirt you've got and where the production gaps might be. So like this is the solvent extraction electro-winning setup for the oxide material at Mt Kelly. You've by telling you stuff you already know, buying Lady Loretta has now enabled you to do the Lady Annie cutback. You've just had one pit finish. Explain what sort of the feed coming up for Mt Kelly's going to look like in the coming years without buying anything.
No, if you just go back to that previous kind of graph, I mean, everything on this page, from left to right, is fully permitted, ready to go. And largely they are all enlargements of existing resources. So they're, cutbacks or they're further recovery of existing pits. And that's, if you can kind of look at that page, it sort of feeds us out until, 2030, 2031. That's off existing resource. The resource that's shaded in the blue is actually Lady Loretta. So at the time this graph was done, we didn't own Lady Loretta, whereas we do now. So you can kind of see that, from a feedstock point of view, we've actually got probably 7 to 8 years worth of feedstock for the Mt Kelly facility. And, really what I try to explain to people is Mt Kelly has been operating as an SXEW or heap leach operation from the early 2000s. It dates back to sort of the Copperco days. It's a well-known asset. Has good performance. It's very reliable. So, I don't expect many issues or many concerns or a lot of variances out of it. It's very much a sort of foundation asset for us, and really that acquisition of Loretta pretty much does a couple of key things. But the Lady Annie cutback, as we call it, effectively just pushes the open pit mine wall out, and that unlocks about 18,000 tonnes of contained copper metal today. So that is underway this quarter, and that'll take probably the next 12 to 14 months. And then at the same time, we're going to drill out everything that was sitting beyond the mining lease boundary, and that that copper mineralisation extends right around to Capricorn. So again, we don't put ourselves out to be rocket scientists or trying to achieve the impossible. It really is just continuing to develop and explore up in this region. And as I say, I think Mt Kelly, people should sort of think about it like a foundation asset that kind of just keeps on performing and keeps on giving.
Yeah, so looking at that map there, your tenement is just to the west of where Capricorn is, because that's gunpowder on the map there,
that's right,
isn't it?
Yeah, that's entirely right.
Yeah, and who knows what's going to happen there. But before we get into Rocklands, how do you view the oxide stuff? Like in terms of, as you said, it's a heap leach, but it's oxide, so it's lower grade. You're not going to be seeing 7% copper intersections like you have in your recent drilling in the oxide stuff. But explain the cost differences to me in the processing. Is mining these oxide pits at lower grade via a heap leach an easy win, or is you going to be really focusing on the Rocklands sulphide strategy more?
No, I think it's really an equals. But if you think about it, I mean, it's a fairly low-tech kind of operation. At the end of the day, you're mining your material, you're going to crush it, you stack it on a big heap leach, and you put some acid over the top, and it leaks or percolates through to a copper pregnant solution that you basically electroplate onto some plates. Comes off as a finished product. The main difference really is the processing time or duration is quite different. With a concentrator, you're sort of within a day. With a heap leach, you're sort of around about a 400 day cycle. And so what's important there is to make sure that on a day by day basis you're keeping up your stacking and your crushing rates, because if you don't, then it obviously bites you further down the line. And so recovery kind of cycle suggests that you get 30% of your copper out in the first 3 months, and then you sort of start to taper off. So as I say, it's really about the consistency of your feedstock, and as you say, it is typically lower grade, but it's a typically lower cost operation. And then you come back to the sulphides where I guess most people play. To be fair, you get a higher grade if you can. You can get lower grades depending on where you're at, and haulage is a big cost element in all of this processing. But your turnaround cycle is much quicker, and so you've got to kind of try and balance the two out. That's always the key juggling act. But as I say, I look at Mt Kelly and say it's very much the rock upon which we were built.
Yep, very much so. On to Rocklands, and this, it sounds like it's bloody close to brand new. And just give us a quick overview of like what happened at Rocklands, who were the owners, and you obviously picked it up reasonably cheap for how much capital has actually been deployed there by the previous owners.
Yeah, so I mean, most people in the copper space will know Rocklands, back to the Cadeco days where Wayne McRae was kind of the architect that put this all together. More recently we picked it up off CRA, which is ultimately a sort of Malaysian conglomerate. Look, from start to finish, from the time it was inception to today, there's over $600 million spent on this kit. it's a pretty phenomenal kind of piece of kit. So to put it in context, it's about the same size as New Century, and it's about half the size of Glencore's Mount Isa operation. So it's not a small enterprise. It's a full business in its own right. And really, certainly most of the downstream processing equipment is brand new. So flotation tanks and separators are the back end. The guys had only ever used one. You can see it in the photo that we show from an aerial point of view, that there are actually two tanks on the left-hand side that are bright blue, and that is because they've never been used. Yeah.
Yep, I can see
so
that.
it's only the one on the right-hand side that has actually been ever used and commissioned. So a lot of the stuff here is in great shape. The primary kind of pinch point was really around the crushing circuit, and again, it's one of those ones where, if you don't feed in the right material at the right rate, right grades, then kind of shit in, shit out, and that's really the essence of it. So we've commissioned GRES or GRS Engineering, which your listeners might know a bit of. They're also doing the expansion works out at AIC's Eloise plant. But essentially, we've commissioned them to come in and help do all the engineering work and commissioning work for the upgrade on the crushing circuit. We have been able to procure a mill, which we'll use as a SAG mill, as an intermediary, here in Australia. And that's a pretty important kind of win for us. Our alternative was to buy one from China. It would have had a 6-month lead time, and that would have started to make the timeframes certainly a little bit tighter than what they are today. But, as we sort of sit here today, the team are down at Cobar picking up that mill and putting it on the back of a truck, and it should be floated up, I'd say this quarter. And that's the primary sort of, spend, if you like. In terms of the sort of dollars and cents, we were able to procure the whole facility for $25 million equivalent. And
wow.
At the moment, we're spending about $8.6 million on that crushing circuit alone. And then, there's some minor upgrades on different kind of gear. But certainly, look, it's it was a sort of great acquisition at the time. But, as I say, it came onto the market at the right time for us as well.
Yeah, it's great for you, obviously. Shithouse for the people that originally built it, but that's where the good deals come from, unfortunately. How, when you're talking about those 3 float tanks, how one's been used and 2 hasn't, and considering the milling circuit that's going into it, for a 3 million tonne plant, how is it? What are you looking to run it at? Because even if 2.5's a lot of sulphide dirt to get a hold of. Is it modular at all that you can run lower, or you got to really sort of get enough to maintain 2.5? Do you think?
Yeah. So as I sort of said, processing times are a lot quicker. So essentially, what we'll look at doing is, it's like running any manufacturing facility. If your nameplate capacity says 3 million, then you're never going to get hit 3 million, right? By the time you just factor in, downtimes, replacements, refurbishments, it's unrealistic to say it's going to run at that. So we've sort of down-spec'd it, if you like, to 2.5. We think we'll do better than that, but we've, publicly committed to 2.5. And then really, what we'll look at doing is sort of 70% Austral dirt and then sort of 30% third parties. And really, as you alluded to, it's going to be done effectively from a sort of batch, treatment, if you like. Yeah. We'll start receiving, different ore sources. They'll be accumulated and stockpiled on the ROM, and then we'll basically be able to feed them in as they come in. And I think, we'll be able to sort of blend that through. So we'll hit a head grade of just over 1%. Which are, as I said, around that sort of 2.5 million tonnes gives you about 25 to 26,000 sort of tonnes of copper metal units at the end of the day.
Yeah. Yeah. So, and the ore you've got, firstly go through, I guess, what ore the Austral dirt, you've got sulphide dirt at the moment that you can actually that you will put into the mill. And look, you did release some drill holes recently. Like these are pretty bloody impressive. 10 metres at 7.5% copper, and that is at Snow Queen, which is down near the Rocklands facility. But where at the moment is the first dirt coming out of your end to go into that sulphide plant?
So very simply, there's a couple of pits that are actually shown on the Rocklands facility page. So the RS pit, or the Rocklands South pit, and the Las Mineral, or LM pits, as we call them. We've actually spent some money to do some confirmatory drilling of the resource there, and they both do have resources still in there.
Yeah.
So immediately we'll go back and pull those out. And then one of the other big feedstocks is the Lady Annie pit. So the Lady Annie deeps, as we call them, effectively is the sulphide material coming back down out of the western side of our strategy. And they're sort of immediate feedstocks for us. And then, as you say, we've got different prospective tenements like Enterprise, which is on the eastern side, which is, can be immediately available. And then we've got some longer dated stuff. So Snow Queen is one of those, for example. We put obviously one drill hole down and got, a remarkable kind of hit. We'll go back this quarter and put some more drill holes down just to try and give us an idea of the size of that ore body. But, its proximity to Rocklands is first class. Like it's pretty much on the doorstep. And if it is, significant size, then that's a complete game changer for the company. And then without sort of preempting too much, there's another tenement we're drilling at the moment, which I think will be pretty similar. So certainly we have a lot of underexplored and underdeveloped tenure of our own. And that's, part of our sort of organic strategies to drive our own, resource, not just focus on the sort of inorganic stuff with M&A and third-party tolling.
Yeah. Okay. So, and looking at this map, I assume, as you alluded to, like the Lady Annie deeps, that's going to be being transported down to Rockland. So is there much other, and you mentioned Enterprise as well, so there's a lot of stuff up near Mt Kelly where the oxide strategy is that's going to be actually trucked down to be processed at Rocklands if it is sulphides. Is there a good chunk of it, or?
Yeah, no, there is a good chunk of it. And then the other thing I'll say is the benefit of owning both is you can backhaul, the other materials. So you can bring a lot of the oxide materials back up to Mt Kelly, so that those trucks are not doing empty legs. And that's the unique, part, and that's the nice part of having two facilities, right? So, if you're a single asset owner, operator, or miner, then it's very hard. Most of these things go one way, whereas we've got the opportunity to sort of have a multi-layered opportunity set having the two facilities. And that's, as I say, that's a fantastic position to be in.
What the relationship with Glencore? So you obviously got Lady Loretta out of them. You got given cash for that because you took on the environmental liability of it. But the tolling agreement that you've got in place, because correct me if I'm wrong, the Mount Isa concentrator of Glencore's is not on at the moment, which is a 6 million tonne concentrator, whereas you're about half of that. Are you taking, what dirt are you going to take from Glencore as part of that tolling agreement?
Yeah, so the tolling agreement kind of works where essentially they have the ability to toll treat through the Rocklands facility. Our ore is prioritised ahead of everybody else's, as you can imagine. And then really they'll come to us and give us a forward production schedule of capacities that they're after and timing. And I guess my comment is I don't really care what happens at Mount Isa in a lot of respects because it doesn't impact us. And so, what I will say is that the guys that are on the Eastern Hub, as we call it, but pretty much if you think of the Cloncurry region, there'll be a haulage saving of coming to Rocklands over going to Isa. And that's part of
clear on the map there too. Isa's not in the best spot, is it?
No, and so that's part of our sort of, I guess our strategy is that, we just feel like if you think of all the, big new discoveries that have come online in recent years, you think back to, your Ernest Henrys, if you like, with Evolution, and you think about what Harmony are doing with Eva, they're all on that eastern side. And so, we just find ourselves, I guess, uniquely placed to get some of that upside that, otherwise probably does go to ISA. But, as I say, it's just sort of maybe better located.
Is that so? What would Glencore be sending to you? Would it be like is George Fisher or what other mines have they got?
Yeah, so one of the customers that I think is sort of public and come out and said they'll commence mining that may come. We haven't got any definitive agreement, but it's Carnaby Resources. So they're just to the south, sort of halfway between Isa and Rocklands, if you like, on the southern side of the Barkly Highway. They've got Trecolano, which obviously has been drilled and my understanding is they're looking at commencing mining in the back half of 2026. Glencore have the tolling right. They haven't made a decision as to where it is tolled, but that could be a feedstock for Rocklands.
Okay, so when Glencore secures an offtake with one of these developers, they can then say, well, instead of processing it through our 6 million tonne concentrator at Isa, we're going to use Dave's 2.5 million tonne one at Rocklands instead.
Yeah,
okay.
That's it. That's it in a nutshell. And we signed I guess a reasonable number of MOUs with different people down in that region. So on that map, Morona Metals, just to the sort of bottom right hand corner of that, we signed an MOU with them to look at toll treating their material as well. And that'll probably come to market sort of in the coming months as we work through it. We've got a range of people that we've doing some met testing for at the moment. But as those arrangements are sort of finalised, then the public will understand what that means.
What how would you describe the region in that east? Because if I look at, you've got, let's just discount Mount Isa. You got Rocklands in terms of facilities. Rocklands, you've got Ernest Henry for Evolution. You've got AIC with Eloise. You've got Eva building that's a 14 million tonne. Is it?
Yeah.
I think.
Yeah, it's I think the last count's an 18 million tonne per annum kind of behemoth. But yeah, look, it's
very infrastructure. Do you think it's getting pretty rich in that region, or there's actually a lot of operations that will be able to sustainably supply these mills?
Yeah, I think the unique part to sort of point out is that all those guys process for themselves, but they don't do third parties. And so, we've made a point of difference of emphasising that we are open to the region. And certainly that was of appeal to investors in that latest round that we raised that money for, because they see it as a way of being able to monetize a lot of the junior resources that are sitting around that region. So as I sort of alluded to, it's hard, if you own a resource down out of that Cloncurry region, where do you go? If you don't have the Rocklands concentrator and there's no other facility that you can go to, you've got to drag it all the way back to Mount Isa. And as I say, every time you drag another tonne, another kilometre, it's just another bit of your margin that gets lost. Yeah,
well, like those rings there are 50 k's. So just what Rocklands to Mount Isa is a bit less than 200. It's probably just that map makes it look a lot closer than it actually is. I guess look, if you look at what's happened in the gold space in WA in terms of your likes of Westgold and Genesis that are making pretty good coin out of toll treating other people's dirt and just letting those companies do all the hard work and then they just drop the dirt on the ROM. How do you view that strategy for yourself versus the M&A route of actually getting some of these progressive explorers, developers in your portfolio? I assume there's pros and cons of each and both could work. How are you viewing it?
No, that's entirely right. And I think, what I would say is that it provides really optionality for us. So as I said, Glencore give us a full production schedule. We'll sit down and look at those. Typically, they'll probably be of customers or their customers that we know. And then really it's a question about do we see, greater benefits from, potentially acquiring them rather than just toll treating it? What are the synergies that we can extricate out of it? And then it's having a conversation with those groups. I think everybody recognises that this region needs a level of consolidation that hasn't been there in the past. I think various different people have tried to, and certainly from a WA point of view, I think that side of the country is much more sort of mature, if you like, and developed in those combinations. Whereas we probably need to work a little bit harder in getting everyone to the table. But certainly the conversations that I've had thus far, there seems to be some meeting of the minds around a consolidation makes sense at various different levels.
This might be a bad analogy, but for how long this area has been sort of open for consolidation, it just sounds like, with all the parties involved, it sounds like US, Middle East, UAE all trying to negotiate together, and too many people involved and can't get anywhere. Is it a bit like that over there?
Yeah, I think that's probably a pretty apt analogy, to be fair. But yeah, look, it's obviously the big guys. They got some big games in town, and they're big enough to sort of look after themselves. But as I say, there's a lot of junior guys out there that really the only way the region kind of prospers, if you like, is through consolidation. And one of the things that I look at, and sort of, I'm not a 40-year kind of mining veteran rusted on by sort of kicking the dirt on my tenure, for the last 20 years of those. But I look at it and say, all the great businesses do very simple things, and they just do them very well. And certainly most successful businesses have the ability to scale. And I think, the approach that we've taken is slightly different to everybody else in so far as it's probably more production focused and more about generating, revenues and cash flows. But those revenues and cash flows really allow us to open up our own exploration and development. And that means that I don't need to come back to the market every sort of 12 to 18 months to say, I've drilled out another, 20, 50,000 meters. I haven't found anything, but I need some more money. You typically become a sort of a price taker in the market, and shareholders get a bit disillusioned by it. We really sat down to think about a different way of approaching it. And I feel like the approach has sort of resonated. What I would say is, to raise sort of $100 million, across a 3-month period from a standing start, probably tells you it resonates a little bit with some shareholders out there. But I think that sort of differentiated approach is nuanced, but I think it'll hold us in good stead for the future.
Yep. I guess what would you say the major hurdles are, the big ticket items to turn Rocklands back on? Is it any permitting to get over the line? Is it securing a bit of a tolling agreement or an acquisition for a bit of dirt to justify it? What's the big ticket item?
Yeah, look, it's certainly the crushing circuit. I think everybody appreciates, Rocklands is a widowmaker. It's already claimed 2 lives. I'm making sure it won't be the third. But certainly the crushing circuit is primarily sort of the main bottleneck. There's some additional plans. We're currently looking at maybe a changeover on the power solution to grid. Certainly a new haul road in from the Barkly Highway is on the cards, and potentially an expansion. So we have plenty of real estate. The circuits can handle a bigger load, and we have discussed it, I guess, amongst the board at the moment, but probably certainly focused on, learning how to walk before you can run. But, there's a lot of people that would love to see a bigger facility out of that region. And certainly the local community in particular, kind of looking at us to be quite a significant, I guess, employer and generator of economic activity in that region. And we, finding good support with the local communities, and that applies equally up at Mt Kelly as it does in down at Rocklands.
So I guess over the next 6 months, can we expect to see probably some additional dirt coming, whether it's by tolling, like in parallel with getting that crushing circuit going? There's going to need to be some more feed coming.
No, that's it. And either that feed comes organically, Matt, through our own resource, or it comes inorganically through M&A or tolling, whichever way you want to put it. But, there's very much that sort of dual track strategy to just make sure that we've got more than enough dirt, by the time we turn the green button on. And what I've said to everybody, despite, my management team telling me we'll be ready to go earlier, is we won't be turning it on before July 27.
Yep.
If you look back in the past and you see where some of the issues have been in past operations, it is not having sufficient feedstock, not having the right kind of feedstock, particularly the right grades, but type of copper as well. And so, we will be making sure that all those things are crossed off before that button goes on, and that won't be before July 27.
Yep. Good to that. Sums it up very well, mate. Last question, and it's probably to do just with the board, probably question without notice. I get you're obviously running interim exec chair. You're running the show at the moment. And you got the likes of David Quinn-Livin, who's been around the bush in from Silver Lake fame, now on the board of Vault, mining guy. I assume it's going to be there's going to be an MD to come in at some point. You don't have to be running. I don't think you got your family office to run. You don't want to be doing this the whole time. But is that sort of another big management catalyst as well that might be in the pipeline?
Yeah, I think that's fair. So essentially at the moment, as you say, I've sort of led this, if you like, for the last 2 years, effectively getting it back up and running. We did undertake a search at the start of 26. And certainly the people on the page, David, Neil and myself, as the sort of remuneration nomination committee, didn't feel like we found someone that kind of aligned with the values and what we were looking to do. But certainly as the business gets bigger, we will attract a stronger calibre of candidate. And really, that's what the board is focused on. The transformation from a junior resource company to that mid-tier, does bring better quality people, and we're sort of be much more focused around, new MD. There will be a new MD. I'm not professing to hold on to the reins forever. But certainly, look, having those guys, around the table now is wonderful. Neil is a sort of, 40 plus year, metallurgist. He probably hates me saying 40 plus years, but he runs the Rocklands, rebuild strategy on a day-by-day basis for us. David, as you mentioned, has been around the blocks a few times and can ably sort of guide us around that corporate kind of area. Steadying influence, and Sean, has been great for the exploration guys. So, we didn't do a lot of exploration previously. We never had the sort of capital to do it, but there's three guys with very strong mining backgrounds and skill sets that certainly help our management team on a day-by-day basis.
Yeah, awesome, mate. Thanks for answering that. And, mate, that was a good overview. It sounds like, mate, till that plant gets turned on in a year's time, there is going to be a bit happening. So it's going to be exciting times.
I often say to people, if people think that money never sleeps, mining sleeps less than money. So
and you've got to deal with both of them now.
So it's look, it's every day is an interesting day. There's plenty of opportunities that come to us, both inbound and outbound.
Yeah.
And what I would say is we'll be, completely different company by the time Rocklands comes back on in 2027.
Yeah, awesome, Dave. Thanks very much for coming on, LEVRD, mate. I've had a ball, and best of luck in North Queensland, mate. And not this Wednesday, but
no, exactly. We'll stick with the Blues.
Good on you, mate. Cheers.
Bye, mate. Thank you.
And as always, punters, thanks to the Dosh sponsor, the Toad, the Cane Toad. Link in the show notes to the 3D drill hole visualising software that will change your life. Thank you very much.